Good morning. This is the weekend update for Buy Sell Short for Saturday, March 9th, and the rally just continues to advance. We had better than expected unemployment numbers yesterday. The economy created 236,000 jobs last month, way above the consensus of 165, although we kind of got an idea of that from the ADP report the previous session. So kind of muted. We had that early big pop and then essentially treaded water for most of the day. And as you can see, looking at the 15-minute chart, really over the last week after that big bounce back rally, we've moved back into this slow, steady move higher. Support right now is at this uptrend line here. We've got two on the chart, but this one here marks the 50-day moving average. So we've got support around 14,355, and then below that 14,200 to 250 is the next support band. So even if we did see some sort of drop in the market, we would probably find some decent support here. As for Monday, RSI is still not overbought on the 15-minute time frame. We also saw positive MACD cross on Friday, so we'll probably see some sort of upside move come Monday. Looking at the daily chart, again, you can see this nice strong trajectory that we are in right now, and as I alluded to in the Thursday video, what we could see happen is something similar to what happened at the end of December, where we had that sell-off, then the big move, and then we just slowly moved up over the next month. That was a great time for stock pickers, and we're looking like we are moving into a similar sort of thing right now. So very, very good sign for us. Russell, again, all-time highs here. There's no point in me pulling these charts out because we are in new territory in all these charts. So all we can look for is to see how long the euphoria is going to last and how much higher people are going to chase. Now, again, as I mentioned before, if you go to the website under articles, there was an article I posted there a week ago that since 1954 we've had 13 new all-time highs, and they use the S&P 500 as their test case. The largest gain number of days after that break of the rallying continuing was 2,700 days. So 9 years was the best case scenario, and the gain was 221%. The worst case was 132 days of a rally and a 2% gain, and the average / median mean or whatever was an 18% or so gain lasting about a year. So if we follow the median, that would take us into next year. Not saying we would have any dips or anything, but that would take us into next year. And typically year 2 of a presidential cycle actually is a down year, so, or a topping year with some issues. So, if we go off the median based on this trend we have going back since 1954, things look really, really good if you step back over the medium term, at least for this year. As for oil, you recall a few days ago we talked about that if this rally was to have any meat to it or conviction from the big money, we would probably need to see oil prices bounce. And over the last few days, we've actually seen that. Oil has started to bounce. RSI has bounced up. We're probably looking at a positive MACD cross later this upcoming week, and stochastics are still nicely oversold. So the move in oil now is supporting this upward trajectory in the stock market. Quick mention on the bullish percent index that has ticked up after that little minor tweak. And again, we go back to last year. The action in the bullish percent index almost mirrors last year, so we need to be wary of that. Remember, as I've mentioned before, it's a leading indicator or lagging indicator actually. When it gets to this stage, usually takes about a month or so later, 2 months before you see a decent sized retrace in the market. So it's something we need to definitely keep an eye on. But anyway, let us jump into some stock plays. CBLI biotech stocks have been hot over the last few days, and that is great. That is a great sign. Whenever you see biotech stocks busting out, traders jumping into them, big moves in them, That means the speculative money is in the market, and that is great to see. CBLI is still coiling here. You recall the last couple of times that we jumped into this one right before the big moves, it did a similar thing. It was like hemming and hawing before it broke out, and then it went boom. So looks like we're looking for a close, 160, 161 to set this stock off, but probably on a break through that, we're going to see one of these big up move candles as we saw the last couple of times. CPRX, I really like the chart setup on this one. As I mentioned, this stock tanked last year when their cocaine addiction drug failed in the trials, but since then they have picked up a phase 3 trial from BioMarin. They're expected to report, their data monitoring team is going to be reporting results on the trial that's ongoing, and they tagged on a press release in February that they were going to be releasing that by the end of Q1. That's a couple of weeks away, so the chart is setting up. We've got some potentially very good news here. We're right under the 50-day moving average, a breakthrough 49.50 cents, and we are off to the races here with a first target of 60. And then, if we get good results, there is no reason why this stock cannot double, especially in the speculative market where we have been really lacking craziness in these microcap stocks. And when microcap stocks lag the kind of rally that we've had for the amount of time I consider them lagging, when they go big. So we're waiting for that big move, and hopefully we're about to see the beginnings of that next week. RSI breaking 50, positive MACD cross, stochastics about to break 50. The technicals support a big move on this stock in the upcoming week. One of our nice little runners last week was DRRX. We finally got that break through the 125 area, traded as high as 139. Got a retrace on Friday on lower volume. Not uncommon after you have a big pop like that. We're holding above the 125 support. We are still expecting a couple of big news potentials from this stock over the next couple of weeks. So typically we see a big pop, retrace, and then a continuation move higher. So let's see if we get that nice little bounce back this week. New little biotech stock we jumped into yesterday, OXBT. Last week, this stock went splat. And it went splat because they announced they sold some preferred shares. Essentially, the price was 25 cents. This is when these guys made the deal and went short, and this is what happened at the bottom. Typical financing, especially in biotech stocks. It's illegal, but they get away with it because no one ever does anything about it. But the advantage for that is we are in at the bottom, and we jumped into this one on Friday. Huge volume bounce back on Friday. We are also about to see a positive MACD cross. Stochastics are in the basement. Check this on-bounce volume spike. That just shows you this was all buying on Friday here. A break through 31, 31 and a half, and we're looking at a move to the first target, 20-day exponential, 38 cents. And this has the potential to do a full gap retrace up to the 50-plus cent area. The chart supports it. It sold off on financing. They got their short covered, and looking to jam it right back up again is probably the likely scenario that we are going to see here. PEIX. Again, another chart I really, really like going into this week. Over the last month, this stock has been compressing between the 50-day moving average, this blue line, and the 200-day moving average, this red line. Now, it's peaked above it and below it. But, as you can see, it ends up just settling right between that range, which is getting very, very tight right now. We are at a 2-cent range on that, and we are also about to see a positive MACD cross. And as you can see, the last couple of times we've had a positive MACD cross, we've had a nice spike of at least 20% or more on the stock. Volume is starting to roll in here, and I believe this is the week that we finally get this breakout move. And the chart reminds me a lot of last year. Let's check out a one-year chart here. When it was consolidating back in August and September, and then went boom, ended up doubling over the course of a week or so. I think we are setting up for a similar scenario on this stock over the next few days. Another biotech stock we are in, STEM, is flagging here right now. We thought we'd get that positive MACD cross on Friday, but it was kind of bizarre on Friday. We had some action, but we had a lot of people just sitting back and waiting, wanting to buy, but you really didn't see that craziness that we saw on Thursday. I think probably because it was a weekend and we had the employment report, we had that pop and dip. I think the buyers are going to come into these stocks in a big way this week, starting on Monday. Last 4 positive MACD crosses on this stock. The stock has gone boom. So 185 would be my next add point here, with 179.78 stops. So I'm looking for a move to 2+ off this chart setup. Oh, while I'm talking about PEIX, BIOF, these two kind of move in tandem. This one spiked early on Friday, and that's what set PEX off on its daily run. Pays to watch both these stocks. Found resistance yet again at the 575 level. Going into a Friday, you had some low volume selling off, so that's why I ended up closing red. But it's about to get a positive MACD cross. Stochastics in the basement. RSI holding above 50. This would be the buy trigger here, 575. A break of 575, and we could see a very nice upside move on this one. So keep this on close watch with PEIX, because when these one or the other goes boom, the other one will follow. WYY. What can I say? Profitable cybersecurity play. There's getting a lot of talk about cybersecurity right now. These guys are profitable. They report earnings in 2 weeks' time. We had a nice little sell-off from that big run up to 73 cents. We are starting that bounce. We are about to get a golden cross here. Probably going to occur Monday or Tuesday. And remember what DRRX did on its golden cross. You know, this is a stock that should be trading over $1 just based on its profitability and its revenues. I think this upcoming week is when they start to chase this one in a big way. Locked and loaded. We've got some very, very nice plays going into this week. And actually, last but not least, Apple. We've not talked about Apple in a few weeks. Last time we really talked about it was when we ID'd that Head & Shoulders breakdown back at the end of December, and it ended up giving, what, a 20% downside move. I think it's time to start looking at Apple again. And the reason I say that is, you know, we've got the market breaking out to all-time highs, and this is a stock that has not participated at all. All the movement has been on all the other stocks. I'm thinking, you know, everyone and their mom is bearish, negative, hates Apple right now. Time for this one to possibly put in a rebound. A break of the 20-day exponential around 440, and we could see a $30 to $40 upside to the 50-day moving average. And as you can see, every time the stock is sold off, it's actually put in a nice little bounce about once a month or so up to or close to the 50-day moving average. A way to play this would be the April 470 calls. I believe they're trading between $4 to $5. A bounce to the 50-day moving average, and you would be looking at a double on those options. So I'm thinking this week we could see Apple start to reverse course to the upside. 440 break, you could look to picking up some of those options if you're so inclined. And it could be, you know, that little extra push we get to help the market continue its move. So that's it for the video. If you've got any questions, shoot me an email, feedback@buysellshort.com. Otherwise, I'll see you guys in the chat room Monday. Have a fantastic weekend. Bye.